everyone, welcome to Understanding the Business Environment. Today we're lucky to have Fiona Anderson accompanying us. She's the Director of Client Coverage at the National Australia Bank. And thank you, Fiona, so much for coming and talking to us and the students at home about what it is you do and the role that economics plays in your job and in your business. Can we start just with an overview of what a Director of Client Coverage is?
Yeah, no problem, and thanks for having me. So essentially, I'm a Director of Client Coverage within our corporate and institutional business. At the moment, I'm specialising in government and higher education customers. And what that means, I suppose, on a day-to-day basis is that I'm managing the overall banking needs of complex customers. So whether that's debt funding, transactional banking, markets risk management, or asset finance, trade finance, that kind of thing. And I work closely with a lot of our specialists in each of those areas, together with our economists as well, who help deliver the economic insights to all of our customers.
Great, thank you. Well, it's good to hear there's economists employed there because, as you know, I'm one. One of the things that I always wonder, though, and I remember as an undergrad, sort of you'd encounter sort of demand and supply curves and start thinking, yeah, okay, but what is this for? This is sort of one of the key topics we're going to be looking at right after sort of students watch this video in a way. And I was wondering, maybe you could tell us a little bit how knowing that sort of stuff, just the simple demand and supply diagram, how that interplays in your business and why that is helpful. Even understanding the sort of very basics of it.
Yeah, sure. I think there's probably two aspects of that. The first being, I suppose, at the holistic level for the bank, you know, the demand for our own products and solutions and what impacts that, whether it's things like, you know, fintech starting to operate in our market and, you know, the demand for traditional banking solutions versus, you know, how we keep up with that rapidly evolving payment space. And then whether we're the best people to deliver those solutions or whether it's partnering with someone who's a bit more nimble perhaps than a traditional bank. So there's that aspect to it, the demand for our own products. But then I suppose on the other side of that, there's the, you know, how we manage our customers and the risk within their business. You know, what's the demand for their products? You know, we want to make sure, particularly when we're providing funding to a customer, that they've got a sustainable business and, you know, they can weather economic downturns or, you know, the competitive environment that they're operating in. So it's really making sure that they're, I suppose, you know, got that framework around them that helps manage the fluctuations in demand for their products.
Right. So as we all know, demand can move up and down based on different things. And I guess one of the key things when understanding risk is that we think of a demand curve looking at a particular shape and level at a certain point in time, and then something unexpected might happen, which might sort of push that down. How did you guys find businesses were dealing with the shocks related to the pandemic when that demand curve really went down? And how does an institution like NAB handle that sort of very unforeseen sort of risk?
Yeah, no, I think particularly in the sector that I operate in, which is, you know, those very large customers and the universities as well. You know, the universities are particularly, you know, stable entities. They're very, very highly rated. They've got strong asset bases, really, you know, advanced finance teams that help manage things. So as much as it was a, you know, complete out of the blue, you know, event, they were fairly well, you know, progressed in terms of managing that. And I think, you know, there has been an increased need for funding as part of that to support this period. But, you know, the Reserve Bank also supported the banks through that as well and enabled us to be able to quickly provide additional funding through to our customers.
Right. Yeah. Of course, the the resilience, I guess, of some of the bigger institutions is obviously clear. Well, some of the smaller companies, I guess, are the ones that we would see not surviving.
That's right.
One of the things that you mentioned now is sort of the supply of funds and the availability, or for the bank to supply funds for different institutions, and of course that supply component is key because during crisis periods, demand for funds can really increase. Thinking about demand and supply again, though, with the pandemic, it's sort of a really sort of interesting shock in a way, in the sense that it's a supply crunch followed by a demand crunch. And so you get this big contraction in the economy and of course inflation as a result. How do you feel with the rising risk associated with inflation? Do you think the average business understands that? And how do you feel, what do you feel the role of sort of getting appropriate economic advice during periods of high inflation and high uncertainty would be? And what role would say a bank or an economist at NAB play in this space?
I think that's a really interesting point, because we had the banks forecasting rate increases a lot sooner than the Reserve Bank actually put the rates up. So, there are a lot of people, individuals and businesses that, got additional funding on the basis that they thought, interest rates were going to stay relatively low for a while. We've seen that really, that overnight rate really increase quite rapidly over the last period. So I think that's really only starting to flow through the economy now. And, it'll be a matter of time, this year and next year, when that really starts to have an impact on people. There's still funding available, but it's certainly, not on the same conditions as it was, 12, 18 months ago. So I think that'll certainly start to flow through to businesses. Right.
Yeah, it's interesting that, because when we think about investment and the supply of loanable funds, it's also a demand and supply curve, with investment being the demand curve. And one of the things people don't realize is that investment demand curve actually responds with a pretty big lag, because these are big plans that people have had for a long period of time. Yeah. And so those interest rate hikes actually will impact activity tomorrow rather than activity immediately, which is why these things can be prolonged. Yeah. And I guess sort of that's pretty core in my mind to understanding the business environment in this space. With more generally, though, when you guys at NAB say deal with sort of the average client, and how does that interaction between their own market influence sort of, I guess, the risk associated with their market influence your behavior toward that smaller player? And how far do you go in providing sort of general advice about the economy, the business environment to clients when they approach you? Yeah,
I mean, we certainly work really closely with our economists to provide updates to customers on what those economic indicators are. I mean, it's always a view. It's one of those things, a bit like the weather, very hard to forecast. So it's really just a view at that time rather than any particular advice. But, we can certainly see things like, if I think about what we do with government, there's a lot of interest in, where interest rates are headed. What's that going to do to consumers' discretionary spend? What's it going to do to, the cost of mortgages? What's the level of financial distress that we're seeing with our personal customers as a result of these increases? So we certainly work really closely with the economists to try and provide those insights to our customers.
That's interesting, because one of the things I always like to think about is we have these sort of macro level policies from the government, like interest rates. But then you do mention how will this affect mortgages and housing, demand for houses and stuff like that. And that's of course a core business of a bank. But one of the things I like to think about is these linkages between the macro and the micro side of things. Do you think on average the average homeowner um, has a good understanding of what's happening there? And if not, where do you think those gaps are? And what should institutions like ours, universities and banks be doing about stuff like that?
Yeah, that's a really good point. I think, certainly a lot of individuals wouldn't have access to the same type of economic insights that we do in terms of market conditions. So all they really see is, the news in terms of the rates going up and the impact to them in terms of monthly mortgage payments. So, it is difficult I think for individuals to know where that's headed. But yeah, certainly something that, universities and institutions such as ours can work more closely on and making some of that, those insights more readily available. And, we do have a lot of that I know that my customers access in terms of the institutional banking side of things. But, and it is there, it's available, but whether people are actually have the interest or the, really want to get into that level of detail is probably the other point.
Right. I mean, in a way, it builds resilience, sort of that knowledge. And but as you said, even access to it sometimes really hard to digest. So
yeah.
I think it's not going to be a sort of short-term solution, right? In terms of appropriate investment in understanding these sort of things. Just a little bit on sort of going back to your job. What would you recommend to sort of a student that's interested in working in your team, or working, say, generally as your bank, in your bank as an analyst, for example? What sort of path would you tell them to take right now when they're, between 17 and 19 on average, to end up sort of in your team?
Yeah, sure. No, I think it certainly can be a bit overwhelming, I think, when you are studying, knowing what all those career options are that are available to you. So, I can speak from my own personal experience. I majored in economics and finance and found that to be a really good basis for the role that I'm doing now. And I think once you do, start to work within a bank such as NAB, there are lots of opportunities that become available to you. So, you can certainly start out doing one thing and then, you might have an interest in, economics itself, or whether it's, the financing side, IT, HR, there's all sorts of career moves you can make once you've kind of had that basis of experience and really got a feel for what you enjoy out of what you're doing. I know NAB works really closely with RMIT in terms of the early careers space and how we manage the graduate intakes as well through, the graduate programs are a really great way to, try out a few different roles within the bank and then, get a sense for what you really want to do. But I also think that, talking to as many people as possible that work within an industry that you're interested in, will certainly give you a feel for what's involved in those roles. And, some of that, what I talked about before in terms of the insights that the banks are producing, there's weekly, insight reports, there's monthly, there's podcasts. You can get a sense of what an economist role would entail within a bank by having a look at some of that information.
One of the things I find really interesting about banks, and a lot of people don't sort of immediately associate this type of role in a bank, is sort of roles where people are focusing more on societal issues, like poverty reduction, helping your community, environmental problems. And as an economist, I have colleagues sort of doing that sort of work. What can you tell us about that sort of work at NAB, for example?
Yeah, it's certainly something, particularly the sustainable finance aspect of things is something that's really become a lot more prevalent in what we're doing over the last few years. There's not many conversations that we have with customers that don't involve that, and there's certainly broader considerations than traditional risk metrics. We now look really closely at the ESG factors that are within the customers that we're working with. That certainly gets a lot more focus than it would have done previously.
Mm-hmm.
I'm really lucky in the role that I'm in now that works with government to be able to work on some of those things like affordable housing and things. So, you can really take it where you want. I've got a particular interest in sustainable finance, so I'm doing some study on that at the moment as well through the bank. And, then you're kind of the advocate for that within the organisation and can talk to a lot of people about it. So you really get to, I suppose, look at things that you've got an interest in as well and try and, build out your role to include some of that as well.
Yeah, I think that's one of the nice things about economics as a degree in particular is that there's this really broad, sort of broad applications that can take you from sort of very money focused on the one spectrum, on the one side of the spectrum, to very much society focused and everything in between. And the interplay between these things can be really, really interesting. Just a final question, if you don't mind. Imagine, some of our students are future entrepreneurs. Some are current entrepreneurs. What advice would you give someone who's thinking about starting a business or has just started something quite small? Going forward, how would they, based on your experience, especially with risk, how do you build resilience for those younger businesses, those smaller businesses, so that they can be successful in the future? Yeah,
I think it's really important to understand the competitive environment that you're operating in with your business venture. Who are your competitors? What's the demand like for your product? How are you going to advertise? What's the marketing strategy? How do you reach people in terms of, we're so overwhelmed with, the level of information we get about different customers and products. Like, what's the strategy there? Obviously, as a banker, what kind of funding do you need to get your business established? What's the, what funding do you need to support your business until you're able to generate cash and profits and, either distribute that to shareholders or investors. There's certainly a lot to consider, whether it's something that's vulnerable to economic downturns, whether that's something you need to think about as well in terms of your business strategy.
Right. And one of the interesting things is that some businesses are actually not so vulnerable to economic downturns, but they can be vulnerable to economic, when things are fine, I guess, in the economy. And there's a few examples of businesses that have thrived, say, during lockdown, that, as soon as that ended, people are like, no, I'm not doing that anymore because I don't need to stay at home all the time. So it's good to think about good times and bad times in terms of your risk assessment. Right? Yeah. Well, I think that's really interesting. Thank you, Fiona, so much for your time.
Thank you.
And with this video, I hope will inform our students, and hopefully you'll be getting some RMIT graduates in the future knocking on your door and being part of your team.
Excellent. Thanks, Alberto.
Thanks, Fiona.